Hello, my name is Bill Waltman. I'm the president of PYA Waltman Capital. This is my partner, Eric Foster here. And today we want to talk about just some questions that one should ask when choosing a financial advisor. There's a lot of different models out there, and so we thought it might be instructive and helpful for not only our clients, but prospects looking for a financial advisor to consider some questions as they go through their sorting process. So with that, we'll just kick it off. Eric, I guess the first question is, does the advisor operate under a fiduciary standard or a suitability standard? And what does that even mean?
Well, as you know, in our industry, there's really kind of two paths. I can be a firm that is a broker regulated or state regulated firm, which means that I can make money by charging a fee, or I can make money by selling a product. And in our firm, we fall under the fiduciary standard. We can only charge our clients fees. And we'll talk more about, the implications of that. But as a fiduciary, as you know, a fiduciary means we're legally obligated to only make a decision that's in your best interest, and it can't be in ours. So our model is pretty simple. We get paid by one person, and that's our client, and that reduces conflicts of interest on our end.
And really supplement that as well, the suitability standard, which is a fine standard as well, but that applies more to the brokerage industry. That means that the advisor can be if there's two products or two recommendations, they can choose the one that has a higher compensation to them, the advisor, as long as it's suitable for the client. Whereas in the fiduciary model, we would have to choose the lower cost alternative, assuming that the two products or investments are similar in nature with similar outcomes. We would be, under our fiduciary model, required to select the lowest cost alternative.
Next question, Bill, how would you describe what we do and how we get paid?
I describe what we do as really being counselors to families as well as to institutions. So we're really there to first listen and understand what their values are, what they're trying to accomplish, and then build a team around them to, one, form a plan to reach those objectives in a manner that's consistent with their values, and also to construct a portfolio that really aligns with their plan and will hopefully ensure success long term. We are compensated, we're compensated only by fees, so we can't sell commissionable products. I think that's fairly important and something that clients or prospects should know. And the reason that's important is that we have no bias or incentive to recommend one product or one planning objective over another, as the client is the one that will pay our fee, in a similar model to a CPA or a lawyer. So when the products pay the advisor, that becomes less transparent to the client, and also can incentivize the advisor to recommend certain products or certain investments over others.
How would you, if you elaborate a little bit on that, how would you juxtapose a firm like ours with how a CPA or an attorney has a revenue model? And second to that, how would you describe how we think about it as an investment, like our firm taking the time, investing on the front end into a client relationship, and how we think about that from a fee standpoint?
Yeah, I think that's a great question. So we're going to spend a lot of time and energy, as you know, building relationships with our clients, just like a CPA would or a lawyer would. And typically, when you've got a good CPA or good lawyer, you're not looking for a transaction. You're looking to form a relationship and someone who can provide counsel to you and your family through the years. So in that type of a relationship, there's going to be a lot of time involved on the front end of understanding your family and so forth. And it's not focused on a transaction or making a big fee up front. It's focused on a fee that's going to be level through the years, so to speak. So it's transparent, you know what you're paying for, and most importantly, you're trying to build a trusting relationship to where interests are aligned, and there's that trust that when a recommendation is made, you know it's in your best interest. Eric, there's a lot of credentials in the financial advisory world. a lot of acronyms, and that can be very confusing, even to professionals at times. So, what is the standard for clients of PYA Waltman? If you're an advisor at PYA Waltman, one, is there a standard? Do you have to be certified in a certain way? And two, how does that sort of compare or contrast with maybe other firms that do or don't have standards, and are the standards equivalent in your mind and what they mean?
Sure. Well, as you know, when you and I got started doing this, there were a lot less acronyms and a lot less designations. And I'll admit, in my current life cycle, there are a lot of things that I'm not even sure what they are. I'll just speak to how we think about that and what we really value. Our advisors are going to be CFPs, Certified Financial Planners. That's a designation that we certainly want really all of our advisors who are giving advice to clients to possess. That is a holistic designation that is a lot of rigorous study and training and an exam and an experience requirement. And even though we're going to have CFP professionals, as you know, we're going to work with a team. And so you have you and I as the older advisors, seasoned, we should say. That sounds better than older, but reality is. And so we're going to have people with experience who have seen all kinds of different situations and navigated a lot of things with clients who are going to sit in with our younger advisors to help transition some of that knowledge downstream. We may also have, for different reasons, advisors that have additional things. You and I are CPAs, some of our research guys. We have a research guy that's a CFA. So we may have advisors that have specialty and other knowledge that they want to pursue, that they feel like can add value. So, but I think our core is going to be around the CFP designation, just as an important designation to have to help us deliver that advice. Bill, describe for me, if I'm a client, who am I going to meet with? Who am I going to talk to? Is that one person? Is that a bunch of people? Does that vary based on the kind of things maybe that we're working on? Tell me a little bit about how you see that play out.
Yeah. So as you know, we have a collaborative model here. So you, as a client of PYA Waltman, you will have what we will term as a lead advisor. So that would be an Eric Foster or Bill Waltman or someone in that capacity who's going to lead the engagement team. Around that lead advisor, you're typically going to have a financial planning associate who will support the lead advisor in providing counsel and planning resources to you as a client. And there may also be a client service associate, a member of our client service team that's going to be helpful in just interacting with you as a client in terms of paperwork, transfers of money, and those type of things. So typically, you're going to have an engagement team of at least 3 people. That obviously can flex or be changed depending on your needs, unique needs. So if you're someone who has a more investment-centric type of relationship with a firm, then we're going to staff it to those needs. But that's also important, is that we're different in that we're not a siloed or a lifestyle firm, meaning, as you know, you have clients, I have clients, but those clients are all clients of PYA Waltman Capital. So the reason that's important and that we collaborate as a team is that if Eric Foster's on vacation with his family for 2 weeks, and we hope you are, having a good time, and there's a urgent need that comes up with one of the clients that you're lead on, we have other people on the team that can address the needs for you as the client and do that in a very expedient way. Obviously, we can inform Eric on vacation if that's need be, but we have the resources to rally around you as a client to give you the need and service that you need and expect, and it's not dependent on one individual. And that's really the philosophy of us as we started the firm, is to build a firm that has enterprise value, that's not dependent on one person, We care about our people, we care about our clients, and if the firm is dependent on one person, that's not good for the client. If something happens to that person, it's not good for our staff, because we want our staff to have long, rewarding professions, careers. So that's really important as well. So it's not dependent on one person, it's a team collaborative approach, and that's for the benefit of our clients and the benefit of our staff.